Welcome to Money Talk. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the House of Representatives has passed on third and final reading the 2026 national budget. We speak with Mon Abria, Chief Tax Advisor of the Asian Consulting Group, live from New York. The Bureau of Internal Revenue says it will go after online sellers who are not paying correct taxes. And the Bangko Central's rate cut likely to boost Philippine REITs bond yields, though the peso is likely to weaken further to 59. We ask why with Alfred Benjamin Garcia, research head of AP Securities Inc. The proposed 6.793 trillion peso national budget has hurdled third and final reading in the House of Representatives. A total of 287 lawmakers voted yes to House Bill 4058, or the General Appropriations Bill for 2026. 12 lawmakers, mostly from the minority, voted no. 2 abstained, including Cavite Representative Kiko Barzaga. Senators who will look into the bill when the session resumed on November 10th. The education sector gets the highest allocation in the 2026 budget at 1.281 trillion pesos, representing 4.1% of GDP. Considerable funding has been given to healthcare, infrastructure, and social protection. But unprogrammed funds for foreign-assisted projects remain, with House Appropriations Panel Chair Micaela Swansing saying there is no way it can be removed in the budget. 200 million pesos was also scrapped from the office of the Vice President.
Isang budget na ginawa sa liwanag, hindi sa dilim. Sa ilalim nito, walang naitago, wala ring tinago, at walang ibang layunin kundi tiyakin ng bawat piso ng buwis ng ating mga mamamayan ay bumalik sa kanila.
Meron pa rin unprogrammed appropriations. 243 billion pesos na basta lang ipinauubaya sa Executive Department kahit hindi malinaw kung paano ito gagamitin at kung saan ito mapupunta.
Hindi lang dapat ito i-zero, kundi dapat ay no. No, wala na dapat unprogrammed funds sa General Appropriations Bill. Naging pugad tuloy ito ng mga ghost, substandard, and overpriced projects.
The Bureau of Internal Revenue says uncollected taxes from online businesses may have already reached billions of pesos. BIR Commissioner Romeo Lumagi said the agency is intensifying efforts to monitor online sales and coordinate with digital platforms. That's to ensure compliance with tax laws and prevent further revenue losses. Just last year, the BIR issued a circular requiring electronic marketplace operators to impose a 1% withholding tax on the sellers and merchants. The move aims to level the playing field between traditional stores and online sellers, ensuring all businesses, whether physical or digital, pay their fair share of taxes. Our first guest has been conducting a series of investment and tax briefings overseas, from Australia to Japan and now in the U.S. He joins us now from New York City. Mon Abria, Chief Tax Advisor of the Asian Consulting Group. Good seeing you again, Mon, and welcome back to the program, and congratulations on your recent recognition in the Outstanding Filipino Awards.
Thank you, Cathy.
All right, so first off, how are our kababayans, our overseas Filipinos, taking this all in, from the government corruption allegations to independent investigation, freeze orders, and calls for tax relief? From where they're at, where in Australia, in Japan, or the U.S., what are some of the reactions that you're getting on the ground?
Well, from our kababayan, it's quite obvious because we see it on social media. They are not just disappointed, they're really angry and they really want to put an end to this cycle of impunity because we've seen this from the Napoles, the Farmally. There will be investigations, and at the end of it, none of those in power, those with the highest position, and those who continue to abuse their position either to benefit their family businesses, their political dynasty, nothing has changed. So I guess more than the anger, they really want to see really people behind bars, politicians, corrupt politicians behind bar. And as to our foreign investors, of course, they're quite concerned, especially that how can they trust the government that lured them or that's asking them to invest in a country where there are trillions of pesos which are not being spent properly. And this investigation, the longer it takes, I think the more there will be higher skepticism. And probably, as mentioned by Ambassador Romualdez here in the US, the 100 to $150 billion potential investment will be at risk. And that's just in the US. We're still talking to a lot of investors in Asia, in Australia, in Europe. I think the sentiment is the same. They
Okay,
know
so
there is
if that's the
corruption.
case and then 200 billion is the minimum, what could be the range in which we might be at risk when it comes to foreign investments then?
Well, unfortunately, Kathy, as mentioned by Secretary Go, the pledges may not be affected, but the pledges are not necessarily translated to actual investment. I think we have to accept the fact that there has been slowing down, and it's really affected gravely by this scandal, and it will never be pacified by just doing the investigation. We need to show to the world that they will be penalized, that they will be put behind bars, and they will no longer be in government. I think that's the bottom line because the same names, the same family, political parties will still be seen by the world running the Philippine government. Then how can they even trust us?
What about the 2026 national budget? In terms of trust, the House of Representatives just approved it on third and final reading. It's now sent to the Senate. What do you make of what was included and excluded in its approved version?
I think the Congress should really be more careful, and I was surprised that they passed it as I'm not concerned about the total budget because you know, Kathy, 20 to 25% of our GDP is government spending. We cannot really just cut it because there is a corruption issue, but the unprogrammed funds, the confidential funds, and we don't even know if there are still insertions. After this, we'll be writing to the Senate Finance Committee to the chair, Senator Gatchalian, to make sure that they will really scrutinize line by line because that's the hard-earned money of our taxpayers. So it's not acceptable to me, Kathy, that the unprogrammed funds still exist. But the realignment, I think that's good that the flood control project budget will be realigned to to education, to health. That's good. But also, it's important to maybe consider the direct support to our kababayans, like paying the liabilities of our poor Filipinos in public hospitals or in hospitals around the country and really keeping the rice at 20 pesos as promised by the president. That will need a lot of funds. Maybe we can consider that rather than a blanket unprogrammed fund, which is in billions of pesos.
Well, apart from those considerations, given the taxpayers' frustration over what's happened to the previous year's national budget and now the 2026 budget, there have been calls for a tax holiday or a pause as a sort of a stimulus, but not all are in favor. I spoke last Friday with RFID co-convener Ramon Del Rosario Jr., and this is what he had to say. Let's listen in.
Well, first of all, it's very costly to the economy as a whole. Rather than tax holiday, how about corruption holiday? How about a holiday against all of these things that they're doing, all of this patronage politics? How about that? I mean, gosh, there's so much they can do to set things right if only they would set their mind to it, just control their greed.
How about a corruption holiday? That's what he said. But he's also not in favor of any tax holiday, not in favor of lowering the current 12 to 10% VAT. Says they're not solutions because we need these very taxes, but that they are
Actually,
put to
Kathy,
good use. That's what the problem is. So what do you make of it?
Actu- Actually, Cathy, I agree that the one-month income tax holiday is not good because, again, as he said, we cannot pause. The economy will be hurt if we stop collecting taxes. Especially, it will disproportionately benefit those who are earning more, that are paying more taxes. So I think the one-month income tax holiday is reckless and should be reconsidered. But a possible increase in personal exemption that will benefit the middle-income earners, I think that's very probable because majority of our compensation income earners, Cathy, are still below 250,000. Therefore, probably almost 20 million of our employees are income tax exempt under the trade law. So income tax holiday will only benefit those who are making millions, which are less than 2 million of the registered employees. So again, a possible increase in personal exemption is better than a blanket tax holiday. The abolishing VAT is also not is also reckless, but reducing the rate from 12 to 10, honestly, Cathy, I think the DOF should study it, especially that the finance secretary is the one who increased it from 10 to 12. Because the argument of the World Bank is to remove the unnecessary VAT exemptions. Therefore, we're not asking for heaven. We're asking them remove the VAT exemption so that we can afford to reduce the VAT so that the prices will go down, especially that there are so many VAT exemptions which are politically motivated. For instance, the exemption given to PWDs and senior citizens. In Canada, they're given coupons or direct cash transfer, meaning they can get free medicines, free healthcare. I think that's that's less subject to corruption than giving an exemption that is being abused. Senator Gatchalian did a hearing and estimated 88 billion because of fake PWD ID. So ibig sabihin, it's not only the public sector, even the private sector is abusing all these exemptions. So I guess the DOF should consider that so that lahat tayo makinabang. A lower VAT will not crush the economy if it's done wisely, removing the VAT exemptions and reallocating all these benefits to something that will directly target those who we want to benefit, not subject to abuse of whoever wants to take advantage of the gaps in our laws.
We have about a minute, Mon. What do you make of the BIR's plans to tax the online sellers at this point in time?
BIR should stop auditing us. BIR should audit the politicians and the corrupt politicians. They do so much PR. Stop it. Commissioner, stop it. Do your job, audit the politicians. We have trillions of budget from 2017 to 2025. 20% of our GDP is government spending. How come you keep issuing tax clearance? You're not doing your job. Do your job. Audit, not us. Audit the politicians and the corrupt politicians and the contractors, including the campaign donors. Cathy, there's no problem in auditing, but auditing the wrong person over and over again, I think there's something really wrong about it. And there's still corruption in BIR. Don't be a hero. You're not a hero. Do your job. We are paying you. Make sure you prosecute the corrupt politicians because in our tax code, Cathy, there is a perpetual disqualification. Maybe that is our saving grace. If Al Capone case happened, maybe we can disqualify all these corrupt politicians. So come 2028 election, they are no longer part of our ballot.
Well, we hear you, Mon, as we know that you've been formerly with the BIR. Thank you so much, and do take care where you are. Mon Abria of ACG in New York. The stories making headlines around the globe. In Israel, the last 20 living hostages held by Hamas have been reunited with their families after 2 years in captivity. As a result, Israel freed 250 Palestinians serving long terms in Israeli prisons and 1,700 others detained in Gaza during the war. The hostage swap is part of the first phase of the Gaza Accord agreed upon last week. Speaking before a summit of world leaders where Israel and Hamas are absent, U.S. President Donald Trump says the deal opens the door to rebuilding Gaza.
But the momentous breakthrough that we're here to celebrate tonight is more than the end of the war in Gaza. It's with God's help, it'll be the new beginning for an entire beautiful Middle East. In one sense, it's so horrible that it could have taken place, but in another sense, it's so beautiful to see a new and beautiful day is rising, and now the rebuilding begins.
And in Madagascar, President Andry Rajoelina goes into hiding for fear of his life after weeks of Gen Z-led protests over corruption. But he did not announce his resignation to save the Southern African nation from poverty. Anti-government protests began late September over chronic water interruptions and electric outages. The protests reached their climax over the weekend when an elite military unit joined the protests and called for the president and cabinet members to resign. You're watching Money Talks. Coming up, research and analysis firm BMI says the Bangko Sentral is likely to continue cutting rates until next year. And we speak with Alfred Benjamin Garcia on the rate cut's likelihood of boosting Philippine REITs bond yields. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. markets rebounded after Friday's sell-off after Washington and Beijing hit a pause in their renewed trade tensions. The Nasdaq gained 2.2% in yesterday's session. S&P 500 jumped by over 1.5%, and the Dow climbed by over 1.25%. The benchmark 10-year Treasury yields ticked down to 4.036%. Precious metals hit fresh highs, with gold breaching the 4,100 mark and silver breaking its 1980 record. U.S. futures are little changed so far, with the Nasdaq rising by 0.2%, with both the Dow and the S&P climbing by 0.1% each. Asian markets mixed on Tuesday on the back of continuing U.S.-China trade tensions. South Korea's Kospi up by over 1%, Japan's Nikkei 225 down 1.2%, and Australia's ASX 200 by 0.1%. And a quick check on our own markets. The PSEI opening Tuesday slightly higher by about 0.1%, 6,054. The stock market closed yesterday, Monday, in the green, rising by about 0.25% on the back of bargain hunting, according to AP Securities. The broader all-shares index, however, fell by about 0.1%, with local counters mostly in the red. As for the Philippine peso, it opens a tad stronger, 58.222 to the dollar. Peso slid again by half a centavo yesterday to 58.245 against the greenback amid increased volatility due to the U.S.-China trade tensions. The 10-year government bond yields ticked down to 5.92% from the previous close of 5.955%. The Bangko Sentral ng Pilipinas says demonetizing 500 and 1,000 peso bills as anti-money laundering measure might do more harm than good. That's after former Finance Secretary Cesar Purisima proposed scrapping large bills to curb corruption and make it harder to move huge sums of cash. This comes amid an ongoing investigation into flood control projects, where witnesses claim to have delivered bundles of cash in suitcases, and viral photos showing piles of cash at a regional public works office tied to the probe. Bangko Sentral Governor Eli Remolona, however, warned the idea is not as simple as it sounds. He also said while such a move might inconvenience corrupt contractors, it would also burden ordinary Filipinos, given how widely these bills are used. The central bank is still reviewing the proposal and has not made a decision yet. A global research firm sees the Bangko Sentral ng Pilipinas extending its monetary policy easing into next year as inflation cools and growth momentum slows. BMI expects a 25 basis point cut at the central bank's final meeting in December, bringing the policy rate down to 4.5%. It also sees another 50 basis point cut in 2026. The Fitch Solutions unit says the BSP is likely to front-load rate cuts to support the economy amid corruption concerns and uncertainty over the U.S. trade policy. It projects inflation to average 1.6% this year, slightly below the BSP's 1.7% forecast. Growth, meanwhile, is expected to average 5.4% this year and 5.2% in 2026, both below the government's targets. The BMI also warns that a 19% U.S. tariff on Philippine exports, along with weak business confidence, could further weigh on the economy. Central's rate cut likely to boost Philippine REITs bond yields and utilities, though the peso is likely to weaken further to 59. With us now for more is Alfred Benjamin Garcia, research head of AP Securities Inc. Good seeing you again, Alfred. Welcome to the program.
Hi, Cathy. Good morning. Good to see you again.
Okay, so given what's gone on since the surprise 25 basis point rate cut with the quake in Davao that followed Cebu's, what impact do you think might these have on GDP?
Well, the Cebu region, the Central Visayas region, and the Davao region, together, they account for around 10.6% of Philippine GDP. So not to trivialize the suffering of our fellow Filipinos down to numbers, but that will definitely take a hit the GDP, especially in Q4. So it's another headwind that we are facing. On top of the weakened business sentiment due to the corruption allegations, as well as the U.S. tariffs that have been imposed.
And apart from those, what do you make of the 2026 national budget's passage and third and final reading in Congress?
The 2026 budget is it's necessary, I guess, but we'll have to be more vigilant in watching how the budget is spent.
All right, and the House-approved budget, that still has to be transmitted to the Senate. It's not yet approved until final, and that will be reconciled at the bicameral conference committee level still. How do you think investor appetites might look like at this stage? Will there be more bargain hunting, or do you think a narrow range of trading of sorts, given where the peso is likely to go?
So far, we're managing to stay above 6,000. We're still seeing some bargain hunting every time we hit that level. So that signals a willingness from the market or from investors to enter at these prices, and they still see the Philippine market as cheap at these levels. But unfortunately, the market is also having difficulty going above 6,200. And I guess this very tight range indicates a lack of willingness for investors to hold on to Philippine equities for a longer time. So they've been tending to take profits every time we go close to that 6,200 level.
Yeah, but I guess it's a stock picker's market, but where do you actually invest in? I know that you've become interested in the Philippine REITs because the yields are looking attractive at this stage with the rate cut that happened last Thursday.
That's right. So the declining bond yields have been making the dividend yield on REITs more attractive by comparison. And we think that REITs are still at this, given this current environment, is still the best way to get exposure to the property sector in the sense that it's a bit less risk and you still have that not really guaranteed, but you have robust dividend yields on top of it.
Within rates, when we take a look at the luxury and upscale segments, might that be impacted by the investigations, the mention of luxury properties being sequestered and being included in the freeze orders?
Yes, that's actually, there's a lot of speculation that the luxury and upscale market will be impacted by the corruption investigations. But that's why we like REITs, because REITs tend to have exposure either to offices or retail. So there's really no REIT that gives exposure to the residential market. So by choosing REITs over the property, their parent companies or their sponsor companies, we sort of avoid that risk that it will get hit when we see a decline in demand for luxury and upscale condominiums.
Okay, there's a selection that we see on the screen of your top picks. It's going to be a stock picker's market from here on out with a lower policy rate. Take us through some of them.
Okay, so for Ali and RLC, we like them mainly because, well, for Ali is kind of a benchmark when it comes to property. And we think it's just a matter of time before Ali rebounds. RLC will like their exposure to the mall sector, which is retail. MY is kind of our dark horse pick. It's a construction company. We think that potentially the more increased oversight over smaller contractors would push a bit more business towards the bigger contractors. And then for the rest, it's mostly a play on the declining interest rates. We believe that the lower cost of debt will give them more funds available for expansion, especially for those that are in a very capex heavy sector like Manila Water, AP, and CIREC.
Well, the other asset class we have to look at is currencies, the peso. I mean, I've had a conversation with Jello Taninco of Security Bank about 24 hours ago, and he tells me the peso is likely to settle at the 57 level by the end of the year. But you're saying that the peso weakness is likely to persist. How weak and why so?
Actually, for the short term, we're seeing a weakness in the peso, especially since the recent rate cut. That has again narrowed the interest rate differential with the United States. And at the same time, the surprisingly dovish tone that the BSP took has sort of weakened the peso. We are watching the 58.30 to 58.50 level. We believe, technically speaking, if we breach that resistance level, there is a potential for further weakness up to above 59. But again, this is short term, and it could be possible that we might settle at around 57 by year end.
So could that keep the Bangko Sentral from cutting in December, or could it even encourage it to?
Actually, a rate cut in December is still on the table, I guess, given the dovish tone of the BSP. But we will have to see how the peso reacts, how the Q3 GDP numbers look. If the Q3 GDP numbers looks really bad, that might trigger another cut in December. But our base case scenario is that we'll likely see 3 rate cuts next year rather than 1 in December. So I think we will skip December and have 3 cuts next year.
All right, there are lots of moving parts, but thank you so much for your insights, Alfred Garcia of AP Securities. And before we go, a new trailer just dropped on Edgar Wright's latest high-octane thriller, The Running Man. Set in a near-future world obsessed with television violence, the film follows Ben Richards, a desperate father who joins a deadly reality show where contestants must survive 30 days while being hunted by professional killers, all for the amusement of a bloodthirsty audience. The film reimagines Stephen King's dystopian classic with Wright's trademark mix of action, style, and satire. It stars Glenn Powell and Josh Brolin and opens in Philippine cinemas on November 12th.
Welcome to The Running Man. Contestants will be hunted for 30 days. Anyone can kill you.
Gosh, it feels like a Friday, but it's not. Happy Tuesday, everybody. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here. Kapatid, we are one news. All sides, all the time. Have a great day ahead.